Alrighty, happy Thirsty Thursday, everyone. Hopefully, everyone's doing very well. Excited for the very long weekend that we have coming up. Happy early 4th of July. I will probably be posting some videos this weekend to make up because I was on vacation for a little bit last week and earlier this week, Monday. Not to mention, if you are new here, welcome. I tend to put out videos Monday through Friday on this YouTube channel. I'm probably going to drop some bonus videos when the market is closed and maybe this weekend. Going over just some simple stuff, how to set up some charts, go over some fundamental analysis, some technical analysis, pretty much post education stuff on the days that the market are closed. Today, I have a tremendous amount of stuff to talk about because there is a lot of drama and a lot of nervous people that are very fearful that, well, this AI spending bubble may come to an end. And companies are no longer going to be buying chips, which means the AI build out is going to be gone magically, right? So I do want to talk a lot about that. Like I said before, if you are new here, welcome. Hopefully this video brings you joy and value. If it does, please smash the like button. Let me know down below in the comment section. Definitely subscribe if you want to see more of me and more of this YouTube channel on your subscription feed. Okay, so what am I going to be talking about in this video? I want to go ahead and talk about SoFi probably straight off the bat here. I do want to pull up my public profile as well, too, on this YouTube channel. Yesterday, I didn't have enough time to do so. I want to keep this video under maybe 20 minutes for today. Then I want to go ahead and talk about some government data that just came out today. On the flip side, I also want to really talk about this article that is driving people bonkers right now. Pretty much Meta is going to be renting out some cloud space. Very similar to what SpaceX plans on doing as well, too. Then I kind of really want to talk about the Fed governor next meeting. Pretty much some expectations that the market has. And then in conclusion, I really want to talk about this survey that I really personally enjoy. AI Investor Sentiment Survey. This one comes out every Wednesday. So I kind of really want to go over a lot of economical stuff for today. But firstly and foremost, SoFi. If you are a SoFi bro or a SoFi sister, which that means if you own SoFi and you're a dude or a gal, definitely let me know down below. I'm a raging SoFi bull. I've been a SoFi shareholder, long-term investor since February 2024. And, oh boy, what is going on? Hold on one second. You know, I love you security features, but sometimes you're a pain in the gonads. If you're new here, once again, welcome. I'm doing a public profile challenge, looking to take this sum of money in the course of 17 months. It used to be 18 months to 6 figures, and we are well more than halfway there. I actually do have some crypto as well, too, which I didn't realize that if you move money into your crypto department on Webull, it kind of takes it away from your main profile value. I honestly haven't bought crypto since 2021, so I definitely am glad that I pulled the trigger on Ethereum. More than glad. I do have a video why I bought or why I chose to buy crypto. That video was posted last week. I ended up selling out of a Adobe position that was a loss for me. Adobe is actually very up of where I sold it from, but I bought Ethereum with that money. I ended up buying some Palantir, ServiceNow, and also opened a Coinbase position as well too. But regardless, SoFi is definitely one of those stocks where it can go ahead and swing your profile very, very quickly in either direction. And if you watch my videos going back to November of last year, so around almost 8 months ago now, my SoFi position on this account, my private account, I'm holding 1,642 shares, massive position for SoFi. On this account, I only had a cost basis of $4,900, but I was up over 120% on SoFi. That's because SoFi was at its all-time highs back in November of last year. And once SoFi broke $25, I've been buying shares like crazy. And I have increased my total cost basis on this account from $4,900 to now $9,100. I can definitely tell you that my SoFi position is going to be long-term for the next 10 years unless the management team changes course. My AMD position, though, I'm not looking to hold AMD for 10 years, but I am looking to be a long-term investor of AMD because on this profile here, I started buying AMD water cheers, by the way. Hold on. I'm a real person. I'm not an AI generator I need water breaks, damn it. my throat gets dry, especially when I'm talking nonstop. I started buying AMD on this profile publicly back, I believe, December timeframe when AMD really started to get below $200. I have been buying AMD on my private account since like Liberation Day last year. I still have shares. I believe I got some as low as like the high 80s. I definitely know I got a lot below $100. And I'm up tremendously on those shares. So I do want to talk a little bit about AMD, but understand that my mentality, and this is what I'm doing personally, you do you at the end of the day, do your due diligence. Don't try to replicate my strategy, build your own strategy. But my strategy for AMD is very different than SoFi, but there's going to be a point in time where SoFi is going to claim this account like that. I mean, once a stock like SoFi gets rockin' rolling, it's going to move very quickly. And if anyone is new to the market, when you're dealing with growth stocks, this is a growth profile, very, very much, a very risk-on profile here. But when you're dealing with risk, very growth stocks, aka risk, it can swing very quickly in either direction. And about 2 months ago, AMD was if you watched my video from like 2 months ago, I think I was actually down by 5% on my AMD position here. So it goes to show you, do your due diligence and look at great, phenomenal companies. But SoFi, if things go the way that I think it's really going to go, SoFi is going to very much be taking over this this account very shortly. Definitely probably within the next 6, 9, maybe 12 months here. Okay, so public account, pretty much I'm going to go ahead and close. Obviously, SoFi, we are very much above a very key area on the charts of at 1850. We're actually a little bit lower now. We could very much rebound by the end of the day. Volume is obviously very much lower right now. It's 10:22 a.m. Volume at the open was definitely very much on the higher side. But I want to go ahead and pull up some data here that we got today. You can literally just Google this data yourself and please fact check me. Whatever I talk about, I encourage you to definitely look at the stuff yourself. Even though this is on their website, or rather I should say this is on marketwatch.com. I'm not affiliated with them at all. I just like getting data from this website rather than honestly the actual like government site. And the reason being is because a lot of times I go on the government website and it lags like crazy. I actually see the data sometimes a lot sooner. When I say sooner, I mean a couple minutes sooner. Okay, a couple minutes, but still. I just have always used pretty much MarketWatch, but understand I'm not affiliated with them. And you can view this data on many other different websites as well too. But today we did get weekly jobless claims. And another thing too is we got unemployment rate. So unemployment rate came in better than expected. That is definitely very bullish for the economy. Now, is it bullish For stocks, well, here's the catch. We want a little bit worse of data. But here's the bad thing about that. The bad thing about it is that we have been in a backwards mentality of a market. We get good data, the market sells off because we're not getting any good chance of rate cuts, right? If we get a little bit of bad data, the market rallies because then rate cuts will be on the table. Now rate cuts don't revolve necessarily around like government data. They revolve around inflation reports. So this government data here, the market is not really looking anymore, in my opinion, at it like it does to CPI, PPI, and PCE, okay? The market is going to focus more on that than pretty much initial jobless claims and very much the unemployment rate. Now, if we were to go back to, let's say, last year, and we were to go back pretty much well before the Iran war, even 2024, 2023, I remember as well too. The Fed said, hey, if employment starts kicking up, we're going to have to kind of really pause on rate hikes and we could be doing rate cuts. And there were times where unemployment actually was going down and the market threw a hissy fit. So we are in such a it's completely effed up. It really is. Trying to keep it PG here, but it's a very effed up situation where it's like, hey, unemployment is going down, like jobless, like we should, like, you know, the overall market should be like, hey, you know, like, okay, what's the deal here? You should want like anything interest rate sensitive stocks to be very much going higher. Our economy is strong. I mean, a lot of people don't want to say that, or a lot of people think the opposite of it. Now, there are parts of our economy, such as the housing section, very much frozen. But I mean, overall, we're not seeing like a gigantic like spike on unemployment. And yes, I am not like in La La Land. I do understand the unemployment rate is significantly higher than 4.2. This is a friggin' survey that gets sent out. I am literally reacting to the data in front of like my screen right now. But realistically, nobody knows what the real unemployment rate is in America. Because if you have been unemployed for years, you are not being counted in this data, okay? So nobody really actually knows. And that's one of the things that the Federal Reserve really wants to kind of really do away with. Before I pretty much get to this article here, revolving around Meta, I kind of really want to, let me save that for the end, actually. Okay, so 27 days until the next Fed governor meeting. The market is just still so much pricing in a rate hike when Wash has just very much friggin' said, like, hey, no, we're not looking for a rate hike. Obviously, we have no chance of getting a rate cut. What is my prediction for 29 July? I really feel that once we get more data revolving around inflation, we're going to see pretty much the Federal Reserve the betting markets give us a higher chance of, hey, we're going to hold rates. There's no reason to go higher, okay? Why would we go higher? This is stupid. Inflation is coming down because the war in the Middle East is concluded, wrapping up. The Strait of Hormuz is open, and oil is right now $67 a barrel, baby. Okay, like, come on, give me a break. No, this is a psychological game. Now, we go as far as friggin' like September. I don't believe any of this crap. The market is either playing games with people or the market is still just a pussy, in my opinion. I mean, I don't foresee any of this stuff really happening. I really don't. 9 December, you're talking, we only have a 20. Yeah, I don't believe any of this stuff is going to happen. I could totally be wrong. And do you want to know what I'll be doing if I'm wrong and the market goes down? I'll be buying stock like I've been in the last friggin' 8 months publicly. In the last 8 months, publicly and privately, total, I have bought well beyond $80,000 worth of stock. Hard cash. Don't use margin, just straight up hard cash. 80 grand. I have bought stock now in the last 8 months, spanned out. Okay? I'm retail, baby. I'm not big Wall Street over here. Big Wall Streeter. Like I said, I am a real person in many, many different aspects. And yeah, if you do follow this YouTube channel, that's what you're pretty much going to pretty much get here. But I mean, hey, $80,000 buying worth of stock in the last 8 months, that is tremendously a ton for some people. Some people that is literally considered to be pennies. But what am I doing? Take away the number. Take away the $80,000 number, right? I am buying stocks in a fearful market. Okay? In a fearful market, I am buying stock. That is it. It doesn't matter if it doesn't matter if you only have $800. It doesn't matter if you have 8,000. It doesn't matter if you have 80,000, 800,000, 8 million, 80 million. Are you buying the fear? That's it. It's a philosophy. When the entire market is going down, you got to be buying the fear. Okay, that's how I've made life-changing money. That's how my stock positions on my account that I just showed, like AMD, I was buying shares in the 190s, 200s. I got a bunch of comments on YouTube saying, what are you doing? You know what? What are you doing? What are you doing? Like I don't understand why. You buy the fear. That is that, and I believe personally that these interest rate hikes, they're honestly a bunch of fear. I could be wrong here, but the thing about it is that the AI investor sentiment survey, it is very much still in the dumpster fire when it comes to being bullish. Now, I really do love this survey. I think it's very much more accurate the way it's driven by algos. And right now, people, pretty much, bullish. We're only at 31%. Ironically, last week, we were at 44. Well, what pretty much happened? What basically pretty much happened is, the Fed governor meeting, pretty much, time to digest. And then on the flip side, we do have a lot of memory chip fears, such as Micron, SanDisk, like all the memory companies that are backlogged like crazy, they're catching wind and they're catching a lot of attention. So a lot of people are saying, hey, is this AI trade really gonna kind of come to like a end in a way, so to speak? Like, what's coming on here? So I want to go ahead and dive into this article that came out yesterday. Meta is looking to go the SpaceX way, could rent out AI infrastructure. Meta stock sees big single day gains in over 5 months. So what does this basically mean in a nutshell? So, okay. SpaceX. SpaceX has a tremendous amount of infrastructure that they are not using, and they are going to pretty much be renting out. A lot of people are saying that Elon Musk did it on purpose, which means he bought more AI infrastructure than he thought he would need so he can be a landlord and rent it out and make money while SpaceX itself is not profitable. Now, the company SpaceX, they are not profitable in the sense of their business mission, but they are making all this other income. For example, let's say that you are a real estate company and the real estate housing market crashes, but you make money by one, maybe you are in the management area. I actually know a real estate company that they do management. They manage property. So you're not necessarily just in the real estate area or the business, you are also in the management business as well too. So let's say the real estate side of the business isn't making any money or taking a loss. However, you have revenue coming in into a different area. That's very smart. So Meta is potentially looking to do the same route pretty much as SpaceX, and also kind of like Google in a way, renting out some of their infrastructure. Now, why is the market kind of really looking at AMD a little bit? Like AMD right now, oh boy. Let me actually pull up the chart here. Oh boy, man. AMD is definitely taking a beating. Nvidia, obviously, yesterday, very much slid. Obviously, AMD is not taking that much of a beating because AMD, if we go ahead and look at AMD on the weekly time frame, so obviously AMD is very much on the weekly chart. We are in overbought territory, okay? We go to Nvidia on the weekly chart. We're very much hovering around the 50-day moving average. We're not in overbought territory at all. But we go to AMD, we have a lot of room to very much move down. But I mean, just like a couple days ago, AMD was breaking all-time highs, and then boom, baby. We got an article dropping like crazy, right? So what does that mean in a nutshell about the article, about what Meta is doing? It means that this AI spend, it very well could be coming not to an end, but it could be seeing a pullback, okay? So you got the major companies in the world. You got Amazon, Meta, Google, Microsoft, so many other companies buying all these chips, right? Well, if Meta is going to be renting out AI infrastructure like SpaceX did, that pretty much means that they could have overbought a lot of their stuff. And that's what the market is very much looking at right now. And that's why we're seeing AMD very much down when the other market is very much up. Meta was up tremendously yesterday. Obviously, there's a pullback happening. But here's the catch. The catch is the AI build-out going to magically go away anytime soon? The answer is no, okay? But we're starting to see signs of a safety net very much happening, okay? AMD is still going to be putting up phenomenal quarters. This year, 2026, the money has already been allocated for the AI infrastructure. Meta has already been, they're already going to spend 145 billion this year. Amazon, I believe, is 200 billion, or that might be Google. Google is either 180 or 200 bill. I honestly can't remember. Microsoft, I think, is 150. Don't quote me on that. But either way, you have all these companies committed to this year. However, next year, are they going to be doing the same level of commitment? Or are they going to say, okay, we're spending too much money, but we're still going to be spending money? And that is the catch, people. The catch is that the AI build-out, it's not going to be over, okay? It's not magically going to disappear. These companies are going to realize, okay, maybe we're spending too much. So instead of spending next year 145 bill Meta, let's just go ahead and spend maybe like 120 and let's see how it goes. Amazon and Google, okay, maybe 200 bill is too much. Let's go down to 175 and see what happens. Obviously, Nvidia's growth rates, they're going to come down a little bit. Maybe AMD can still soar because they're taking market share away from Nvidia. So that's the real thing about it. I personally, as a investor in this AI build-out, it doesn't scare me. And the reason being is because the money is going to still continue to happen. But understand that we are going to be getting a lot of scary shit left and right. And this is where a lot of people get scared and they sell out of their AI, they sell out of AMD entirely. So Water cheers once again. I got to go and get some more water. Stay motivated. Ignore the fear. Ignore the noise. Remember why you got into your stocks. Do your due diligence. I will see you all tomorrow for a brand new episode. Later.